Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company is cooking the books or just having a bad hair day. Today we're diving into Qorvo Inc.'s latest report to see what's really going on under the hood and whether their stock might be a buy or a sell before we get into the juicy details. If you're finding value in these breakdowns, hit that subscribe button and join our growing community. Also, don't forget to check out our Discord server linked in the description below for even more insights and discussions. So what we have here is a current report filed by Qorvo, which is essentially a way for public companies to announce major events that shareholders should know about right away. Think of it as a timely update on what's shaking things up at the top. Qorvo is a company that makes the chips and other stuff that make your smartphones and other wireless gadgets work. They're in a pretty competitive space, and what happens with their stock options and employee plans can tell us a lot about how they're thinking about growth and retaining talent. Now, Qorvo is telling us about some important votes that happened at their annual meeting of stockholders. They approved a couple of key plans, the Qorvo Inc. amended and restated 2007 employee stock purchase plan. What this really means is they're making it easier to give out more stock and stock options to their employee stock purchase plan. What this really means is they're making it easier to give out more stock and stock options to their employees and executives. This is pretty common for tech companies, as it's a way to attract and keep the best people, especially in a competitive market like the one they operate in. Specifically for the 2022 plan, they're adding an extra 3/24 Euphorsian shares of their common stock, which is their basic stock that you see traded on the market. This plan lets them grant things like stock options or restricted stock awards to employees and directors, and for the 2007 employee stock purchase plan, they're adding even more, a whopping 4,000 shares. This plan usually allows employees to buy the company's stock at a slightly discounted price through payroll deductions. It's a great benefit for employees and shows the company wants them to feel like owners. The report also lays out the results of all the votes at this annual meeting. It covers who got elected as directors, what shareholders think about executive pay, and the approval of those stock plans we just talked about. It also mentions they ratified their accounting firm Ernst & Young LLP. This seems pretty standard stuff, but the executive pay vote and the shareholder proposal that didn't pass are often where the interesting stuff lies. Let's zoom in on who's running the show. All 10 directors nominated got re-elected. This means the current board is staying in place based on shareholder approval. For instance, Robert A. Brugworth got a huge number of votes in favor, 7,269,2,641 votes for him versus only 631 votes for him versus only 631,278 against this massive support. Suggests shareholders are happy with his guidance. Judy Brunner also received strong backing with over 70 million votes in favor. Richard L. Clemmer also had a very high number of votes for him, 74138,477 votes in favor. Peter A. Feld saw a similar trend with 7,448,313 votes, E13T ones in favor. This kind of overwhelming support for directors signals confidence in leadership. John R. Harding also received substantial support with 7,246,925 votes for his re-election. Christopher R. Koopmans was also overwhelmingly re-elected with 7,438,12422 votes for him. Alan Esler also got a strong endorsement from shareholders with 73,388,998 votes in favor. Interestingly, Roderick D. Nelson had a noticeably lower number of votes in favor at 60, 12, 55 compared to others. This might be something to keep an eye on as it shows a bit more dissent. Similarly, Dr. Walden C. Rhines received 600 and Downand Civ T 177,214 votes in favor, which is good, but not as high as some others. And Susan L. Spradley also saw strong support with 7,049,6,809 votes for her continuing role. Now, for the executive compensation vote, this is often called a say-on-pay vote, and it's advisory, meaning shareholders are giving their opinion. It's approval with 4,444,106,958 votes and 366,498 against shows that while most shareholders are okay with how the executives are being paid, there's a decent chunk who aren't exactly thrilled. This difference can sometimes be a sign of underlying concerns about performance or pay structure. Going back to the stock plans, both were approved. The amended 2022 plan got 609,17,396 votes in favor. This is a solid win for the company and shows shareholders are on board with giving management more tools to reward employees. The amended 2007 plan also passed with a very strong 74263,548 votes for. This means more shares will be available for employees to purchase, which is generally a positive sign for employee morale and alignment with company performance. The ratification of Ernst & Young as their accounting firm with a massive 815,656,666,666 votes in favour is basically a rubber stamp to ensure everything is being audited correctly. Finally, Proposal 6 is where we see a clear rejection from shareholders. There were 328,553,72 votes for a shareholder proposal, but a higher 417,504 votes against it. This means shareholders voted down a specific proposal that was put forward by one of their own. Which proposal it was isn't detailed here, but it's a clear signal that not everybody agrees on everything that was discussed. The report is signed by Grant A. Brown, Senior Vice President and Chief Financial Officer, and dated August 15, 2025. This puts the official stamp on all the information we've just covered. So what's the big picture here? Qorvo is clearly focused on retaining its talent by offering more stock and stock options, which is a smart move in the competitive semiconductor industry. The overwhelming approval for most director nominees and the stock plans shows general shareholder confidence. However, the advisory vote on executive pay and the rejected shareholder proposal suggest there might be some internal discussions or minor disagreements about how the company is run or how much executives are compensated. These aren't read how much executives are compensated. These aren't read policy is run or how much executives are compensated. These aren't read GOI nuances. Worth noting, for any invested shareholder proposal suggest there might be some internal discussions or minor disagreements about how the company is run or how much executives are compensated. These aren't red flags necessarily, but they're nuances worth noting for any investor to our take is that Qorvo seems to be navigating its market competently with a clear strategy. For employee incentives, the biggest risk for a company like this is always competition and technological shifts, but for now, the shareholder, Alright, that's our breakdown of Qorvo's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.